Good afternoon, and welcome to Answering the Latest PPP Questions. My name is Dana O'Donnell, Director of Marketing with Schaeferman Lakeland. Attorney Scott Borsak, who is a partner and chair of the Schaeferman Lakeland Business Department, will be presenting today's program. Before we get started, I want to let everyone know that today's webinar is being recorded, and we will be emailing it to you within 24 hours. It will also be available on our website at schaeferman.com. Should you want a copy of the presentation slides, you can download that from the Handouts tab. Scott will be taking questions at the end of the presentation, so please submit your questions on the Questions tab, and we will try to get to as many as possible. Thank you all for your patience during our technical difficulties, but we're ready to get started. Scott?
Thanks, Dana, and let me add my apologies to Dana's. Seems that no matter how many times you do this stuff, you can still have problems, but we seem to have everything worked out, and I'd like to welcome everyone back. As I've said so many times, welcome back, my friends, to this crazy show that never seems to end. Yes, we did take I guess a 6-week break from presentations. It's not because we didn't want to do any more webinars. It's that our friends at the SBA and the Department of Treasury haven't released anything in the last 6 weeks. It wasn't until August 4th, about 9 days ago, that the SBA finally came out with an additional pronouncement. It was a 10-page series of questions and answers that I'd say half was a rehashing of bits and pieces that were in other guidance that the SBA had shared with us previously, and half represented some slight modifications and new material. We didn't think it makes sense to come back with a rehashing of another program where nothing has changed, so we sat and waited until we had something to say. And indeed, we do have something to say. These questions and answer programs have been some of the more popular programs that we've done. And we've taken a number of the questions that we've received, both over the last 6 weeks where we've been dark, as well as while we've been working on programs for you. And as Dana has mentioned, at the end of the program, we'll have an opportunity for some live questions. So you can send those in during the program. I've incorporated some of the questions that I've gotten from some of you before we started. So we hope to cover a lot of material for your benefit. So as I've said a number of times, that this program is intended for informational and educational purposes only. Nothing in the program is intended to constitute legal advice or to create an attorney-client relationship, and that legal advice can only be provided through a consultation or by engaging a lawyer. Everybody's fact situation is different. The answers to many of these questions are fact sensitive. So I would urge you to consult with somebody knowledgeable on the PPP program if you do have some questions. So I'd like to lead off by talking about the Flexibility Act. And those of you who've been on some of these programs before know that the Flexibility Act was passed almost unanimously by the House and passed in the Senate without objection. I've commented once or twice about the lone member of the House of Representatives who did not vote for the Flexibility Act. What the act did in large part was to extend the covered period for forgiveness an additional 16 weeks. So it's now a 24-week period. It's actually the sooner of 24 weeks from the day the loan funds, or December 31st. The SBA does still have money out there, and it is still possible to borrow if you can find a lender that has funds. There are several loan brokers that have lists of potential lenders. So if your local bank has no funds, you might do an internet search and try to find one of the many loan brokers that are out there. The period in which borrowers can spend money is extended to December 31st. And as I've said several times, there's two spending periods built into this act. One is a period for forgiveness that I generally call a covered period. And as I've said before, that's 24 weeks from the date that the loan funds. And then there's a period where borrowers are authorized to spend money that they have to pay back. So if you don't spend all your money during the 24-week covered period, you can still spend money as a loan through December 31st of 2020, and any proceeds you have on January 1st, according to the law, you're not really eligible to spend anymore. What the Flexibility Act also did was to change a SBA pronouncement that required borrowers to spend 75% of the total spend on payroll costs, and the Flexibility Act reduced that regulatory mandate to a legislative mandate of 60%. So now we talk about a ratio of 60% payroll expenditures to 40% non-payroll expenditures. The act also excluded employees who could not be rehired for various reasons, and provided a safe harbor for a reduction in FTEs if the borrower was unable to return to the same level of economic activity that existed before February 15th of 2020. And before I answer this first question, let me say that in the time period that the Flexibility Act was passed, we still have no guidance on that same level of economic activity. And I suspect that the SBA looks at this as that safe harbor provision won't really be used until after the end of the year. And my guess is that sometime in the fall, they're going to be coming out with guidance on exactly what same level means. But we'll talk a little more about that as we get into the program. So one of the questions I continually answer from borrowers is that how many tests are there to determine whether a loan will be forgiven, and do I have to jump through every one of those hoops? Well, there are several tests. There's the 60-40 or 40-60 test. Under that test, the borrower cannot spend more than 40% of total expenditures for non-payroll expenses, and payroll expenditures have to be at least 60%. Within a couple of exceptions, you have to employ at least as many FTEs after the origination of a loan as before, and all employees who worked for a borrower during the first quarter of 2020 have to receive at least 75% of what they should have under the Q1 average rate during the 24-week covered period. So three major tests here. Do the FTE and salary reduction penalties apply together? Short answer is no. Now, remember that there are two tests we look at on employees: the full-time equivalence and salary reduction. As to full-time equivalence, we have to maintain as many full-time equivalents in the covered period as we did in one of the two testing periods. And for ease of reference, I'm just going to talk today about the period from January 1, 2020 to February 29 of 2020. So on the FTE test, you have to maintain at least as many full-time equivalents during the covered period as you had in the test period. There are a couple of exceptions there, and a do-over and an opportunity to rehire by December 31st. Salary reduction, your employees have to receive at least 75% of what they would have received in the covered period using the average rate from the first quarter. So if you don't bring an employee back who has been furloughed, then theoretically you might have both an FTE and a salary reduction penalty against the amount that's eligible for forgiveness. So what this bit of guidance does is says that in those situations where you could have been subject to both penalties, you only have to deal with one of them. And this was done by way of guidance by the SBA. Yeah, single penalty. Will a bonus given to an employee after funding of a loan be counted toward forgiveness? So we've already emphasized that employers must pay employees at least 75% of the compensation they would have received at the Q1 rate. And again, Q1 first quarter, just my abbreviation. Amount of salary paid in the covered period to an employee that's eligible for forgiveness cannot exceed $46,154 in a 24-week covered period. The employer should be able to provide raises to employees in the covered period, and recent guidance allows for bonuses, tips, commissions, and hazard pay to make up for those payments which were made in prior years or prior periods. So employers have flexibility in paying compensation to employees. We'll see that that notion doesn't apply everywhere, but it does as to wage compensation. Can payroll incurred or paid outside of the covered period still be eligible for forgiveness? So recent guidance provides that payroll paid after the covered period ends can be forgiven if it's made on the first regular payday after the end of the covered period and incurred during the covered period. Payroll incurred before the covered period, but paid during the covered period is also eligible for forgiveness. Now, if you remember early on, both the statute and pronouncements from the SBA talked about payroll as being paid and incurred in the covered period. The SBA has since softened here, and it seems like they're going to allow forgiveness for amounts that are either paid or incurred during the covered period. So that's a little bit of a bonus there, I think. Can I claim more than 24 weeks of non-payroll costs? SBA has provided guidance in an example of utility cost payments. And in that example, the covered period started June 1 and ran to the end of July. And in the example, the SBA said that the borrower there paid on June 2nd utility charges for May, and the SBA would allow those payments as good expenditures. On July 1, the borrower paid the utility charges for June, also allowed. And on August 1st, the borrower paid utility charges for July, and the example allowed 26 days of those payments. So you almost got 3 months in the example that the SBA used when we had an 8-week covered period. Well, now we have a 24-week covered period. The same math should apply where you can get 7 months of utility payments, and the only limitation you're going to face is the 40% of total spend, that you can only have 40% of your total expenditure be on non-payroll expenses. So again, it looks like we've got a longer period than the covered period in which to spend money for purposes of forgiveness. I laid off my employees and they were on unemployment. They won't come back to work. What do I do? If you call your employee back to work, he or she is no longer laid off. And if they fail to report, then they've abandoned their job. Abandonment makes the employee ineligible for unemployment. So the SBA, drilling on that point, has provided that when the employee fails to return to work after being called back, For purposes of salary reduction and headcount for FTE, that employee is going to be ignored. So as a result, the employer isn't going to suffer a reduction in forgiveness for the failure of this employee to return. But using this exception is not without some responsibility. To take advantage of the provision, the employer must inform the employee in writing of the recall and advise that the failure to return could jeopardize their unemployment. And, this is the kicker, inform DOL, Department of Labor, in the state of residence of the employee where they're drawing the unemployment, which may very well jeopardize the eligibility of the employee for unemployment. What are the compensation caps? Well, some of this has been a bit of a moving target, and I thought the best way to present it was in a couple of charts. So the rules are different for employees and owners. And we have some borrowers who are going to elect an 8-week covered period, and some of them are going to elect a 24-week covered period. So as to employees, the 8-week cap is $15,385, and for 24 weeks, the employee cap is $46,154. Now that's just for compensation paid to the employee. It does not include non-compensation expenditures by the employer for things like health insurance, retirement benefits, and state and local employment taxes. For owners, the amount's not nearly as generous. 8/52 of 2019 income capped at $15,385 in an 8-week covered period. In 24 weeks, it is 2.5 over 12 of 2019 income capped at $20,833. What if I can't hire back enough employees to operate my business? Flexibility Act provides a safe harbor exempting the FTE test. Employees who worked as of 2/15/20 who cannot be rehired and the employer is unable to hire similarly qualified employees to fill open positions by the end of this year. If the employer can document their efforts to hire and makes a good faith effort to attempt to replenish their workforce, the employer will be able to exclude these employees from the FTE test. Now, because you have to demonstrate that you are unable to hire these individuals by 12/31, you can't put your application for forgiveness in until after 12/31. So this might delay the submission of the forgiveness application. How are employees who have retired or resigned treated? SBA has provided guidance that employees who voluntarily change their relationship are not considered for both the FTE and salary reduction test. So we're talking about employees who retire, resign, request a reduction of hours. That group of employees are not tested for salary reduction or FTE. An employee who's fired for cause is also not tested for FTE and salary reduction purposes. Cause is generally some good reason for firing the employee. They don't show up to work, they're habitually late, they don't follow rules and regulations, they engage in criminal conduct, they show up at work intoxicated, they commit a crime. There are a host of reasons why an employee might be fired for cause. If the employer simply fires the employee for no reason at all, unrelated to the employee's performance, they are then treated as a furloughed employee who needs to be brought back for the purpose of these tests. Can a borrower claim payments to an independent contractor as salary paid to an employee for purposes of forgiveness? Independent contractors of an applicant borrower are not employees of the borrower. That's because independent contractors are eligible to apply for their own PPP loan. Since they're not employees, payments to them will not be treated as salary for purposes of determining loan forgiveness. Allowing a borrower to secure forgiveness for amounts paid to independent contractors could result in the contractor receiving benefits twice, once as an employee and another as a borrower. Now, how does an independent contractor pay herself loan proceeds? I think good business practice dictates that the sole proprietor maintain one bank account for his or her business and another for personal banking needs. The PPP proceeds should be deposited into the business account, and then payments to the sole proprietor can be drawn from the business account to the personal account by check or other transfer. Bank statements of both accounts can be used to demonstrate the amount paid. And remember, you need to be able to prove the amounts paid if you're going to get forgiveness, so the bank statements are a great way of doing that. What are the elements on forgiveness? What are the limits, on forgiveness for elements paid to business owners? Now, this is one of those places where 4 or 5 panels can't really speak as well as a chart. And some of this has changed. So let's start with the sole proprietor. The sole proprietor, independent contractor, somebody who's filing their tax returns on Schedule C. They're filing the income reported from their business on Schedule C of their 1040. They're going to be limited to 2.5 divided by 12 of their 2019 compensation. And for purposes of this chart, I'm talking exclusively about a 24-week covered period. The sole proprietor cannot seek forgiveness for health insurance or retirement contributions. A partner in a partnership or member in a limited liability company is also subject to 2.5 divided by 12 over the 2019 self-employment earnings, the earnings they report for purposes of self-employment tax. And partners and members also are not allowed to consider their health insurance and retirement contributions as compensation paid for forgiveness. Shareholders in an S Corp also limited to 2.5 divided by 12 of their 2019 compensation. As to health insurance, they're not eligible, but a 2%, the shareholders in a S corporation who have 2% or more of the stock of the corporation cannot claim the benefit of payments for their health insurance, nor can members of the owner's family. As to retirement, those costs are eligible, but they're considered part of the salary cap. So they get added into the salary base and are capped at 2.5 divided by 12 of the 2019 compensation, just as salary is. It's not a separate limit, it's a unified limit. For shareholders of a C Corp, again, 2.5 divided by 12 of 2019 compensation. The health benefits are all eligible, and the retirement contributions, again, capped at 2.5 divided by 12 of the 2019 contribution. Some of these are somewhat different than what we've been talking about over the course of the last 10 weeks or so. And this chart is drawn from the most recent Q&A, which the SBA released. So this does represent current government thinking on these points. How does the 60-40 test work? The test is applied to total spending, not the loan amount, unless you spend the entire loan on eligible expenses. Of the total amount spent, no more than 40% of the spend can be for non-payroll expenses. The balance of the amount spent eligible for forgiveness is for payroll. So if you have a loan of $200 where the amount spent is $150, of which $65 is for non-payroll non-payroll and 85 is for payroll, of the total amount spent of 150, only $40 can be for non-payroll. In this case, that's $60. Since in this example, the non-payroll spend was actually 65, this borrower is going to be limited to 60 plus the payroll spend of 85. So the total eligible for forgiveness in this example would be $145. The entire payroll spend would be eligible for forgiveness under this example. Can I increase contributions to retirement plans and still get forgiveness? Again, recent guidance suggests that accelerated contributions to retirement plans cannot be forgiven. The SBA is going to look to limit contributions to the same rate that they have been made historically. So don't look to cram in all those contributions into the covered period and expect that you're going to get forgiveness. How do you calculate FTEs? Full-time equivalent or FTE is an employee who works at least 40 hours. We're going to look at determining an average FTE over a month, but the starting point is to look at each week. And the FTE, the SBA gives us two methods to determine FTE. One is to divide weekly hours by 40, round to the nearest tenth, and cap at 1, or count full-time equivalents as 1 and part-timers at 0.5. And I suggest you try both tests to make a determination of which one gives you the closest result that doesn't result in a penalty. You can use one or the other, but you have to use them consistently. You can't choose one test for the January, excuse me, apologize, the January, February, and then I did cover that sneeze, for January and February, and then use a different test for the covered period. You have to be consistent. Is there a staff retention period after December 31st of 2020? Short answer is no. The period to measure FTEs and compensation costs ends 24 weeks after the loan funds. The last date allowed for spending of PPP money is December 31st, and the period of time that you have to correct salary reductions and FTE issues is also December 31st, 2020. So whatever happens after December 31st, whether you reduce the salary or furlough employees again, none of that should impact the amount eligible for forgiveness, at least under current law. Who can use the EZ form for forgiveness? As most of you know, the SBA now has two forgiveness forms. One is the EZ or short form, the other is a much longer form. The ability to use the EZ form is limited, and the SBA provides us with the categories of those individuals who can use it. So the first eligible group is self-employed individuals without any employees. So the one-man or one-woman show. Another is for borrowers who didn't reduce compensation of the employees they had during the first quarter by more than 25% in their covered period, and they did not reduce the number of employees or average paid hours compared to January 1 to February 29, 2020, or a borrower who didn't reduce the compensation of Q1 employees by more than 25% and who's unable to operate at pre-February 15th, 2020 levels because of government regulations. And we'll talk about that one safe harbor in a couple minutes. Why should I elect a shorter covered period? So the Flexibility Act allows a borrower whose loan originated before June 5th to elect an 8-week covered period. If you're using the 8-week covered period, you also then are going to test for full-time equivalents, your FTEs, and salary reduction at 8 weeks. So I think an 8-week covered period benefits those who spent all the proceeds of the loan in 8 weeks, and who are unsure about what the future prospects for their business look like in the 16 weeks that follow that 8-week covered period. Because remember, if you do not elect the 8-week covered period, you're going to be tested on salary reduction and the size of your workforce for a full 24 weeks. If you're unable to maintain FTEs or continue to pay your employees during that period, then you're not going to get full forgiveness, because the amount eligible for forgiveness is going to be reduced more likely than not by the reduction in average FTEs. The election for the shorter covered period is made on the application for forgiveness. It's a box that you check. Can I file for forgiveness before the end of the 24-week covered period? This is a related question to the last. So the forgiveness application can be submitted when the PPP proceeds are completely spent, even if that occurs before the end of the covered period. But again, the salary reduction and reduced FTE are going to apply for the balance of the covered period. So if you have reduced the salaries of employees or have fewer FTEs, you're going to face a penalty for FTEs, because we know in a situation where both penalties apply, it's just the FTE test that you're concerned about. You're going to face the FTE reduction for the balance of the covered period. So there may not be an advantage in that case to go for an 8-week covered period or to file the application early. Now, I'm putting this point up here. I'm going to get 1,000 questions about this, but I'm going to say it anyhow. Some of the determination about whether you should wait to the end of the 24-week covered period or wait the 10 months that follow has to do with discussions that have been going on in Washington since June about providing a no questions asked forgiveness, an even shorter form where you check one box and you're forgiven based on the size of your loan. It's possible. I can't say probable. I won't put percentages to it, but there has been discussion and provisions to provide a no questions asked automatic forgiveness for loans of no more than $150,000. So if that becomes the law and you applied before it became the law, there's no guarantee that provision is going to benefit you. So if the current law says you don't have to file an application for 10 months after the expiration of your covered period, if you're in an 8-week covered period, that's going to give you basically a year from the disbursement of your loan. If you're in a 24-week covered period, that's going to give you about 64 weeks. If your loan is between $100,000 and $150,000, it may make sense for you to wait this out a little bit. So while you can file, you may be rewarded for holding back. And again, I cannot handicap the likelihood of this becoming law, but it's certainly worth being mindful of. Filing early might, a big might, be a mistake, but we don't know that for certain. Can I spend the entire loan on payroll? Yes, the entire proceeds can be spent on payroll. The 60-40 test only limits non-payroll expenses. Spending period for forgiveness now 24 weeks. FTE and salary reduction applied at the end of the spending period for forgiveness, now 24 weeks. The longer period suggests the test must be satisfied at 24 weeks. So it probably is going to be easier for borrowers to spend everything on payroll than it was before. When is the forgiveness application due? Now, I've hinted at this in some of the answers I've provided so far. The application is due 10 months from the end of the covered period. Now, you should know that lenders have 60 days to make a decision once the forgiveness application is submitted. The first payment on a loan isn't due until the lender communicates to the borrower about the outcome of the forgiveness application. But that's only if the application is submitted timely. If the borrower fails to submit a timely application for forgiveness, then the first payment's due 10 months following the end of the covered period. So here you've got a double answer. We talked about both the day on when the first payment is due, as well as when the application for forgiveness is due. How does the Economic Activity Safe Harbor from the Flexibility Act work? That's a good question. We're guessing. We're guessing because the only thing that we've seen about it is what's in the Flexibility Act. We need a lot more meat on those bones. But the Flexibility Act allows an exemption from the FTE test if by 12/31/20 the borrower is unable to operate at the level of economic activity which existed at February 15th. The inability to operate is due to complying with government regulation for sanitation, social distancing, or worker safety due to COVID-19. The borrower needs to be able to document this. The SBA did kind of cryptically hint that a complete shutdown was sufficient to satisfy this test. How much less than a complete shutdown will be deemed to satisfy isn't known. So we know if your doors are closed through the end of the year, you have the exception. But if you operate in a personal hygiene business and you can only operate at 50% because of government regulation, is that going to be enough? We are right now sitting and waiting for the answers to that question. No additional guidance to date, but we are hopeful that it's coming. I received an EIDL advance, an economic income disaster loan from the SBA. How will that affect my forgiveness? So borrowers who applied for an EIDL loan also were provided an emergency grant. The grants are, I've seen them as low as $3,000, as high as $10,000. The grant isn't a loan, it's a grant. You don't have to pay it back. But a borrower who made an application for a PPP loan and applies for forgiveness can't get a double benefit. You can't stack the EIDL on top of the PPP. So the amount of the EIDL grant is going to be subtracted from the forgiveness amount. And in this way, the government is going to recover the EIDL grant amount. Well, I plowed through a number of those presented questions pretty quickly. I'm sure that Dana has gathered one or two questions for me. Dana, you have anything interesting there?
I have a lot of questions here that I'm sure you are dying to answer. So I'll just dive right in. Can you re-furlough employees that you brought back when you received your PPP money after the loan is gone and you apply for forgiveness without it affecting your forgiveness percentage?
So that question is really one of timing. Once you submit your application for forgiveness and you're outside of the covered period, you can do whatever you need to do. And if that's furlough employees, you can do that. If it's reduce their wages, you can do that as well. During the covered period, you're going to be tested on what you do with salary and headcount. So you shouldn't furlough anybody during the covered period.
When will the forgiveness application process begin? Are they being examined and forgiven at this time? My bank says not yet, but we received funds in May. Are we still able to file forgiveness now?
So that's kind of an interesting question. The SBA has said that their portal for forgiveness is going to be open to the banks on August 10th. Today's August 13th. So that portal opened on Monday. Every bank has uniformly said the same thing. The SBA is not accepting applications for forgiveness right now. The SBA says their portal is open. Before the portal opened, the banks were all saying that the SBA hasn't put out enough guidance for us to process applications. And many banks are waiting and are not taking applications. A couple of banks, I was talking to a banker yesterday, as a matter of fact, and he had mentioned to me that his bank's portal was open for processing forgiveness applications. So it's a bank by bank situation, and I suggest that you stay in touch with your bank and find out what their processes are. As I've suggested, I don't think there's an advantage to applying for forgiveness today, this week, next month. I'm not even sure there's a benefit to applying this year, but this is going to be a bank by bank experience.
This is another question about the forgiveness application. What date must forgiveness applications be submitted to their lenders by? 10/31 or 12/31?
It depends on the length of the covered period. So you have 10 months from the end of your covered period. If you have elected an 8-week covered period, then your application is due 10 months after the covered period ended. If you elected a 24-week covered period, it's still 10 months after the covered period ends, but that due date is going to be 16 weeks longer if you elected a longer covered period. But no one's forgiveness applications are due in 2020, because if you take 10 months, add it to the 8 weeks, regardless of when your loan funded, everyone's due date is in 2021.
I applied under the idea that I would spend in the 8-week period. Can I now spend in the new 24-week period? And do I need to notify anyone of this change?
So when you file your forgiveness application, there is a box to be checked if you intend to elect an 8-week covered period. You actually, on the first page, the top third of the application, identify the covered period running from what date to what date. So if you want a 24-week covered period, then you would just identify 24 weeks in your application for forgiveness. If you want an 8-week covered period, then that's the information that you would provide. Dana, I lost you.
Oh, sorry. Is there any confirmation regarding the SBA automatically forgiving loans under $150,000?
Well, as much as the SBA would like to do that, I think they need congressional action to do that. So we're all sitting and waiting for the House and the Senate to reconvene. They have quite a big to-do list. One of the big things they need to consider, in addition to whether we're going to get automatic forgiveness, is what to do with unemployment and a raft of tax provisions. The HEROES Act, which the House passed, did have some language in it for an automatic forgiveness. So we got to get Congress back in session. We've got to get the House and Senate to agree on something. They have to get legislation up to the president, who has to sign it. So nothing's going to happen overnight. and none of it's going to come as a surprise. But as we've done for the last 14 weeks, if there is a change that's not widely known, that is beneficial, we're going to send out a blast to every one of our seminar attendees so that you know the change has been made and you won't be left guessing or trying to scratch around at media outlets to figure out what the current state of the law is.
I am incorporated with myself and one other employee. We did not reduce any hours or employees. Can I use the easy form?
If you didn't reduce employees, you didn't reduce hours, and you didn't reduce compensation, you should be able to use the easy form.
If rents are deferred until after our 24-week period, do we still get forgiveness if we pay within a future time frame, which might even be in 2021?
No. No, you're not going to be able to include deferred rents that are not actually paid. You got to pay them.
Is there a salary reduction penalty if the employee had the same hourly or annual rate but a lower dollar amount in the period because their hours are reduced?
There would be. If their hours are reduced, you're touching both full-time equivalent, because if the employee goes from, say, 40 hours to 20 hours, you've gone from a full FTE to a half FTE. That would also reduce the employee's salary, but the only impact is on the FTE test because you can't apply both the FTE and salary reduction test to the same employee.
What happens to PPP loan forgiveness in the event of a sale of the company?
It depends on how the sale is effectuated. If the borrower sells substantially all of its assets to a third party, then the seller entity is still responsible for PPP compliance. If the owners of the borrower, say the shareholders of a corporation, where the corporation was a borrower, the shareholders sell their stock in the corporation, then the corporation bears responsibility for complying with the forgiveness requirements. So those individual shareholders in a closely held company would escape that responsibility. What I have seen in the world of mergers and acquisitions and business sales is that buyers are making sellers remain responsible for the forgiveness part of the PPP process, regardless of the structure of the transaction. But that was a very good question.
We are submitting our forgiveness application early. Do we prorate the $46,154 allowed for employees earning over $100,000 annually?
I would think you'd almost have to. But again, I'm advising clients not to submit early, particularly those with loan amounts under 150,000. The impact of submitting early hasn't been completely developed. If we have an employer who hasn't reduced headcount and hasn't reduced salary, I would think it shouldn't make a difference. If there's been a reduction in headcount or in salary, and the employer runs out of money in 16 weeks, the limit probably isn't applicable, but there would be a penalty because the SBA is going to assume that if you short paid your employees over 12 weeks or 16 weeks, that they would have been short paid over the balance of the covered period. But until there's some clarity on whether there's going to be automatic forgiveness, there's a lot of borrowers who would be well advised not to file early.
If we rehire our workforce to February 15th levels before December 31st, is that all we need to do to meet the safe harbor? What happens if we lay people off after meeting the February 15th levels, but before December 31st?
Well, as the pronouncements read, if you restore those levels, the February 15th level, and then submit your application for forgiveness, you're fine. I could imagine a circumstance where you correct the deficiency in November or December, and then in the weeks that follow, you undo your saving provision, whatever it is that you did, either pay people more or increase hours or bring on more staff. There has to be some period of time that the SBA is going to look to see if you maintained the curative measures. Is it going to be a day? Is it going to be a pay period? It's hard to say. If you maintain it through December 31st, I can confidently say I don't think anybody's going to ask any questions with what you do in January. But if you maintain for 2 days and then lay people off in the third day or change their salaries in the third day, I think you're at risk. How much after that, but before December 31st, are you clear? It's hard to say right now.
Can you pay employees more in a shorter period of time to qualify for forgiveness?
You can certainly pay them more. And we are looking at average compensation over the period of time. So if you're in an 8-week covered period and in 6 weeks pay them what they needed to receive to satisfy the 75% of Q1 average earnings, average compensation rate, that works. But the place you'll have a problem with is on the FTE test, because you're going to come up 2 weeks short of 40 average hours a week. So the better call is not to overpay them for a shorter period of time. Pay them to 75% through the entire covered period, and this way you won't have an issue with the FTE test.
We paid out year-end bonuses in early January. Do we have to use those in our calculation of the 75% when in non-COVID times there's no way an employee would make the same amount as they did in January due to the bonus?
Yeah, there's no way out of considering the bonus paid in Q1 and figuring the comparison of compensation to the covered period. Your only saving grace is that the bonus is being averaged basically over 13 weeks, and you're only required to pay the employees to 75% of that amount. So unless you're paying employees a bonus that's greater than 25% of their salary, the effect of the 75% requirement should still give you some benefit.
We issued a profit sharing payment to employees in their 401k. Can that count towards their individual compensation?
For a non-owner employee, it doesn't count toward individual compensation, but it is good spend. So, just to take an easy example, if you have a non-owner employee who gets paid $15,385 in an 8-week covered period, the employer can also claim credit for a contribution to the profit sharing plan, so long as the contribution is in accordance with historical practices as to timing and amount of payment. So if that payment was another $5,000, the total amount of payroll costs for that employee would be $20,385, the $15,385 in wage compensation plus the $5,000 profit sharing contribution.
90% of our business has to do with churches, events, concerts that have over 100 people gathering. With this said, we use the PPP loan for the other 10% of our business for payroll and non-payroll costs per the law. What proof do we need to provide the lender why we could not bring our FTE up since the government has not let our clients open because of the pandemic?
That part of the law doesn't exist right now. We don't know what it is the SBA expects us to be able to produce. Common sense suggests that if you have a tax return from 2019 that shows the income that you earned during that year, the bank statements that show deposits of revenue into an account, and then compare that to activity of the borrower during the course of the year. You don't have anywhere near the signed contracts. You don't have anywhere near the amount of revenue you had before. Those are the kinds of things I would think would satisfy the SBA. But that's all logic and intuition. We're going to have to wait and see what the SBA specifically requires as to what will be enough. Right now, we're just guessing.
The alternate pay period, which applied to the 8-week covered period, applied to the 24-week covered period also, meaning can the covered period start with the full pay period following loan disbursement?
Yeah, the alternative payroll covered period works for an 8-week covered period as well as for a 24-week covered period. So if you want to elect the alternative payroll covered period, you can do that even in a 24-week environment.
If I have not used all of my PPP money within the 8 weeks, but have after 16 weeks, do I have to wait for the 24-week period to end to apply for forgiveness?
Well, the SBA says you can apply at any time. So when your money runs out, you can apply. I think it's going to be hard to demonstrate total forgiveness if you apply early and you haven't, and you've either reduced hours or reduced pay. And you might want to wait until there's some change in the law.
Are there any special issues if all employees of a small company are also all owners?
Well, remember that panel that showed the reduced amount of compensation that you could pay owners in a 24-week environment? It's not the $42,000, but a $20,000 figure. The treatment of health insurance and retirement contributions are different. And for an S corporation, members of the family are also involved. So the rules are different for owners.
If an employee goes out on maternity leave during the testing period, how is this handled?
Maternity leave is treated as temporary. and that's an authorized leave. It's not a furlough. So that employee is still treated as on staff and as a full FTE.
Can you use the PPP loan to pay taxes owed by the business?
Well, you can use it for that purpose. You're not getting any forgiveness for it. Technically, the only things you're supposed to spend that money on are payroll expenses and the qualified non-payroll expenses. It's hard to, dollars being fungible, it's hard to say specifically where money came from. Technically, you're only supposed to use it for authorized purposes. Taxes are not an authorized purpose.
Given the expansion to 24 weeks, can I apply again and get more funds?
Only one loan. You can't go back in line.
We have independent contractors who may have applied for PPP on their own. We did not count them in our PPP loan calculations. Should we be aware of what the independent contractors did?
No, it's not necessary. If they're independent contractors, you can't pay them with any of your PPP money, and you can't claim anything that you do pay them as providing a basis for forgiveness. How about one more, Dana?
Sure. Given the extension to 24 weeks, is it possible to show that 100% of loan proceeds were used on payroll? And would that be the best possible option to ensure your max potential for forgiveness?
Well, as I pointed out, one of the questions that I had, you can spend 100% of a loan on payroll. There's certainly no problem with that. I don't think your chances of getting forgiveness are better or worse if you have non-payroll expenses in there. You just have to spend the money on eligible expenses. If you color inside the lines, I don't think you're going to have any problem with securing forgiveness one way or the other. So I want to thank everybody for tuning in today. As we get deeper into the year, I'm sure there's going to be a lot more activity from the SBA. We know of certain areas that still require further guidance, and we hope to get that guidance. We know that Congress is going to take up parts of the PPP and look to extend benefits to borrowers. So there's a lot on the horizon here to keep track of. We'll continue to keep track of it for you and commit to share this information by email blasts as we've done in the past. If you have any questions in the interim, you've got our email there. I do put my phone number up, but candidly, I'll tell you, it's a lot easier to get me by email than it is to get me by telephone. Many of you have retained the firm to provide individual guidance for your questions, to help with the crunching of numbers and data, and to prepare forgiveness applications. And we continue to be available for all of that assistance as well. So I hope you all have, you get a chance to enjoy the last couple of weeks of summer, take advantage of the weather, stay safe, be well. Good luck to you all, and I look forward to speaking to you again in our next installment. Have a good day and a good weekend.